Paul, we're starting to see a lot of weakness in crude oil, even on a couple days where stocks have been all right, and one could otherwise consider this a risk-on environment. What do you say?
Yeah, it's all about inventories. We've been building inventories well ahead of demand. Demand has kind of slacked off here a little bit, but we're seeing U.S. producers put forth an awful lot of oil. We've got OPEC coming up, and we may start to hear some talks about further cuts, but there's fractures even within the OPEC countries, especially OPEC Plus and Russia specifically. They really can't afford to have much in the way of additional cuts to energy production. They're hurting right now, and they would like to see more production. So I think you're really going to be looking at still lower, and we talked about it last week. Momentum is on the downside until we start to break that meaningfully. I think we can see lower prices still for crude.
This is now a continuation on the inventories that, at least just judging by the EIA number that we saw today, right? Obviously a big gap between expected and reality. And it's just clear, Paul, that the inventory trend of draws and decreasing inventories ended in September of last year, right? I mean, the chart is very clear, and now it's kind of picking up again. So is this becoming more of kind of a broad economic story? Because around September last year is when we also started worrying about, the economic potential of the global, situation, basically.
Yep, no, absolutely. And you can even go back to late 2015 and early 2016 and see the same thing. Once that momentum gets building on the downside and you look at the economic numbers, we got kind of a mixed bag today, a little bit on the weaker side. Certainly the global numbers have been coming down. The GDP for global growth has been revised lower. We're looking at 1% here in the U.S., and the risks are on the downside of that number. It's going to impact energy in a negative way. I don't think the Fed cutting rates two times or maybe even 3 this year is going to reverse that meaningfully because you're not going to be able to turn the economy around that quickly. So I think we're looking at a potential for an energy-led issue with the economy, with maybe high-yield bonds. So I think you can see some trickle around the equity markets and fixed income markets from these lower energy prices.
All right. Now, should we then think this has any implications for stocks, given that we've had 2 nice days in the S&P, or at least maybe 1.5 nice days, Paul, while crude has kind of just fallen to new levels?
Yeah, I think the risk, the markets, I think, here are rallying strictly on the hope that the Fed is going to be cutting rates at the FOMC meeting coming up here in 10 days or so. And I think that's really the only reason the equity markets are rallying. To that point, we've saw equity markets come off 6-7 weeks in a row, which we haven't really seen in a long time. And I think they're sniffing out the fact that the economy in general is weak. And on top of that, we're throwing additional tariffs on other countries. So the news flow is certainly not good at this point. The only bright spot is the Fed may be coming to the equity market's rescue. So I think the crude market and certainly the fixed income market are both reflecting weaker fundamentals in the U.S. economy.
Yeah. All right. So, Paul, when we look at this, is there an opportunity for an investor to look at the energy companies and say, all right, these are the worst performers on the day. People are extrapolating too quickly about the downturn. Here's a group that should then now be pretty reflexive to any economic surprises, because now that we're watching this happen with crude, if we get some surprise to the upside, then would it stand to reason that these groups have potential to rebound?
They do, but as it is with any market that falls as quickly in such a short time like this, the falling knife part of the market, it's hard to really kind of step into the breach here. Certainly when you look at the U.S. majors, Exxon, Chevron, their valuations are pretty cheap here. But where does crude finish up? Does it finish up at 45, 40? Does it stop here at 50? Until we start to see it bottom out and start to rise, then I think you have plenty of time to get into the energy producers. It's still early, and like I said, I'm not willing to jump into that breach just yet. I think energy trades sideways for a little while here before you start to see anything meaningful on the upside. Would require a lot of growth in the global economy, which right now is not part of the projection.